Okay, we're going to take a look at statement of activity for a nonprofit, and this is problem 16-7 in the governmental and nonprofit book. And we have a listing there of a whole bunch of different account balances, and we want to do our statement of activities for a year ended December 31st. And special events are part of the major or central ongoing activities of the organization. So let's start off with contributions. We have, with our unrestricted net assets, so our revenues and gains, contributions of $5 million. They're unrestricted. We're going to put that there. Next, we're going to have our special event revenues. And we had $3 million of special event revenues. But then we're going to net that with our expenses for the direct costs for having that special event, which were $2,100,000. Okay, this gives us a net amount of $900,000 that we raised from that particular event. Okay, next we're going to have our membership dues. They're not contributions, so we're going to list those on a separate line. Clicking one too many zeros again there. Okay, next comes our investment income, and we had unrestricted investment income from the permanent endowments of $3 million. Now we're not going to put that in the restricted fund, because the purpose of endowments oftentimes the principal is what's restricted. The earnings from that are unrestricted. That's often the way endowments work. So, and that's it in this case. So we're going to have $3 million of unrestricted investment income. We want to then total that up. So I'm going to add up this column to the point, and we have $10 million of revenue gains and losses. Next, we're going to have our net assets released from restrictions. So in that, we have one of the things we have are expenses for research programs for which donor restricted resources are available. So we're going to have $3,500,000 of that, of those type of expenses. Whoops, plus. We also have purchase of capital assets from donor restricted resources of $7 million. So we had assets that were restricted for that specific purpose, so we can go ahead and use those. And then we also have a time expiration. So we had expiration of term endowments unrestricted. So we had money that was temporarily restricted through a time amount, and that restriction is lifted. So our total is $11,700,000 of revenues that have been released from our restrictions, that we've met the requirements, and can go ahead and use those to pay for our expenses. So we're going to take care of the revenue section there. Now we're going to go down to our expenses. So our expenses, we have some program services for research. Okay, so research, we have $3,500,000 expenses for research programs for which donor restricted resources are available. Okay, so we mentioned those earlier, $3,500,000. We also have $1,750,000 expenses for other research programs right below that, which are also program services there. Our other program service is $3 million for expenses for our community service programs. So that's an expense, and we are going to then add up our total program services, $8,250,000. Supporting services, so this is going to be for our overhead type of things. So we had expenses for administrative functions, $700,000. We have fundraising. So fundraising, we had $1 million in expenses for fundraising. That's all of our supportive service expenses. So we total those up, and we have $1,700,000 in expenses. Our total expenses then are going to equal our $8,250,000 plus our $1,700,000 gives us $9,950,000, and we are going to subtract that from our revenues of $22,400. And that's going to give us an increase in our unrestricted net assets of $12,450,000. So next we want to go to our temporarily, misspelling there, temporarily restricted assets. First we have our contributions, and our contributions are going to be a few different things. So first of all, we have our first one is going to be unrestricted contributions, but it's intended to finance next year. So that's what we would call a time restriction. So this will be temporarily restricted this year because it's for next year's expenses, and we can't spend it for next year until next year. So we're going to start with $700,000 of those temporarily restricted items. Then we have donations for restricted program for specific programs of $2,300,000. We also have $600,000 that are restricted for term endowments. So term endowments are temporarily restricted. It means they're restricted for a certain period of time. And then we also have contributions for our restricted plan assets. So that amount is restricted to build plan items. So our total restrictions for contributions under temporarily restricted net assets is equal to $14,600,000. Our investment income restricted for plan purposes was $2,700,000, so we're going to record that revenue. That gives us our next line of net assets released from restrictions that we had calculated above. So we're going to subtract out $11,700,000. That's a reduction because we took those out of temporarily and put them into unrestricted. So our increase in temporarily restricted assets is $5,600,000. Okay, finally we want to look at our changes in permanent net assets. So we're going to start off with our contributions to our permanent net assets, which we have $4 million, which was restricted for the permanent endowment. So that's we can't spend the principal. Our realized gain on those investments were $950,000. So restricted gain on investments, on sale of investments to permanent endowments. So that's restricted, so we are going to keep that in our restricted area. Our total increase in permanent restricted assets is $4,950,000. Okay, so that leaves us with our increase in net assets equal to our $4,950,000 plus our $5,600,000 plus our $12,450,000, or $23 million is our increase in net assets. Our beginning net assets we have calculated of our $3 million unrestricted net assets from our beginning, our temporarily restricted net assets of $9,400,000 plus our permanently restricted net assets of $22 million. And that gives us our beginning of $34,400,000. We add that to our $23 million, so our ending net assets are $57,400,000. $400,000. So that's what we would be then working towards when we do our balance sheet. So our balance sheet would want to come up with our net assets ending up $57,400,000. So again, that's how we do our statement of activities for a nonprofit. Again, we're breaking out our changes in net assets from unrestricted, temporarily restricted, and permanently restricted.